Assalamualaikum viewers, we are in the seventh lecture of accounting cycle series. This is the English version. I am Dr. Safdar Husain Tahir, Associate Professor, Lalpur Business School, Government College University, Faisalabad. I did postdoc from UWA Business School, the University of Western Australia. We learn the accounting cycle, complete accounting cycle with one example. We have already started this example in the previous lecture and we have already completed the transaction 10 transaction from previous examples. We are in the third step of the first phase. The first step is generalization and the second step is ledgers, T account and running balance. We are adopting the T account here and then we are posting. In this lecture, we want to learn how to make the posting and what is the posting of the accounting cycle. These are, you can say, the generalizations we have already discussed and in the previous lectures. Look at it. Here are 12 account. So we have already the 12 T account is there, goes to the first transaction. This is the cash, that is, you can say the cash is 20 lakh and tick this cash, this entry and go to the cash account. This is the debit side of cash account of this. Then go back and then you see this is the owner capital of 20 lakh, 2 million. So go to the this account owner capital right here 20 million and that is 1/1/2024. Similarly, go back to the third transaction, that is the office equipment. Go to the office equipment and then make the transaction is here. This is the posting. In a posting, you convert all these entries in their individual's account, which are called ledger. In this way, you make the transaction, you write the transaction from their generalization to their individual's account. These are the different individuals account. Some account like the cash have more entries of debit and credit. So you do it in the same way and write here the date of that transaction, that is the record. You can say this is the chronological record of the transactions. Then we convert this record to their ledger account. There are in this record there are 2 debit entries and 1, 2, 3, 4, 5, 6, 7 credit entries. You all convert the debit entries and credit entries, but keep in mind, try to start stepwise from this the first transaction, then goes to the second transaction, goes to the third transaction, fourth, fifth, and similarly to all transactions. Which transactions you posted, you just tick here. When you post the cash of 20 lakh, tick here. Then you post the owner capital investment, that is 20 lakh, tick here. Then you post the office equipment, then tick here. Again cash, credit, then tick here. One by one, you convert these entries into their ledgers account. In this way, you can convert all these accounts into their individual account, which are called ledger. This is the posting. So in this lecture, we understand that how to do the posting. Thank you so much.